This is just AMZN on Tuesday, February 18th, 2020. And it was a holiday on Monday yesterday. So here we are on Tuesday. So you didn't miss anything. But it looks like the people who were going short and didn't get out of their positions on Friday, we're looking for, wow, if I could draw this straight, that'd be great. Some sort of continuation here. This looks, I mean, you could draw this a little differently with, these levels in here, like just a continuation pattern on a larger time frame, like a 15 or 30-minute chart, or a bit of a triangle here that's, broken down and retesting and should continue lower. That's definitely what some folks are looking for. And a few of them here were shorting right at the open, right on the first 5-minute candle here. And they got trapped. I'm holding the cursor right here on the low from yesterday. And you can see today, there were some people who were going bearish below that, who were selling. And immediately, I mean, it hardly waited at all. Just ran up, right back into our uptrend channel, and actually ran right into the channel. So it's working again, right? Consolidated up here. This is a great play. If you were in bullish somehow here, buying here, which, I mean, why not buy here? Or making a slightly lower low than yesterday, trapping people, it's a trap, and just ride that up. There was some opportunity to do that. There was opportunities to see this hit a target, get out, watch it consolidate, break down, retrace, right back up into this inverted hammer right here, and short it from here on back down to this same uptrend channel. Or you could have actually held it a little lower, right back into the range from yesterday. Really nice high wave candle, double bottom here, and it just flew higher the rest of the day. Bullish. So the only bearish move was really right in here. So look at this first. So 9:15 was where it's really started to make its last ditch effort to try and move higher. Didn't do it. And looking at the puts, right at 9:15 is where it made a low on the 2100 put. And that's when you got to be patient. You could have gotten in right here, gotten in like 550 by 450, and it ran up to 7. Great, get out, take some profit. But that's all it did. It just ran there. And it wasn't much of a target there other than this previous high. On the day here, there wasn't anything it interacted with. This price is slightly above here. So this looks like the pullback. This looks like the S curve, and it's going to go. But it's a little too early. It needs to rest a little more. It needs, it made this candle. It's got to digest that, essentially. So going back to the puts retraced. The stock retraced, gap back into this candle, this hammer on the 5 minutes range, and give you another opportunity, 550 by 450. This is the one to wait for. This is the one that technically, I mean, you really could have been doing like 550 by 5 on these candles here, and probably would have been filled, like nearly 10 minutes of opportunity, 15 minutes of opportunity getting filled at that price. And then it started to go, gently rolled over, being patient, and just got to move right back up into this same level and then some. And this price, this candle at 1025, this is the candle that slammed right into our line right here, 1025. So at that point, you can be getting out, or you can wait for a possible continuation into the uptrend channel. Either one, you're up. And if you got out right away, great, good plan. You're out at 2R 750. Hopefully that filled. If you waited, you held through half an hour pullback, and then it continued on up a little bit higher. Actually, like doubled the option from, or not quite doubled, sorry, from 550 up to 850, probably 850, somewhere in there. So nice 3.5, 4 hour gain. Something like that. I'm sorry. I keep thinking 450. 550 up to 8 is 2.5 or 3R gain. Sorry about that. And that's just going off of these levels. Well, once you're out here, it's like, okay, how far is this gonna really pull back? And I was watching for this to pull back a little further, give us the same price down in here. Almost made it. It was way down here. I'm like, I really want to buy this, but I know I need to wait. I had that, that urge to just get in there. And I waited a little bit. It came back up to around 21:30, and I'm like, all right, I'm in. Because I knew it was going to pull back a little further than people. I knew. It's like, I don't know for sure, but just from doing this, I thought it was going to pull back further than this level. It was too easy for it to bounce right here. It's like, no, I'm going to wait. I'm going to wait a little longer. Wait another 5 minutes. It's like, okay, glad I waited. Definitely. Because I would have been stopped out had I bought here and put a stop right here. And it needed to pull back some more. And the option I'm going to show you next on the call, we're going to look at the price on this candle versus the price on this candle, the lows. Okay, so this one is 1040, and this was right at the open of 8:30. Looking at the call, this is the 2175 call. 1040, we put in a low of 525. The open, we put in a low of 555. It was really close. I mean, you could have been buying this 6x5 at open, 6x5 again here. I'd rather do it here and wait and not be somehow instantly stopped out with horrible slippage. I'd rather define the risk on the double bottom. I mean, you didn't even have to get in on that candle. You could have waited for the double bottom, and I'd still recommend doing that and still get it set up 6x5. You had 20 minutes after this candle. You had 20 minutes that this would have, 20 minutes here that still worked. Maybe not quite the whole 20, maybe 17 minutes till, $6. It was above $6. But then it was just, okay, how high are we going to go? And this was one of those things where it just ran on up. The only potential rollover location was like right here. If you kind of connect these highs, it's like, okay, that's why that slowed down there. Consolidated. And you can still get out of a little bit or get out here. And then if it continues, get back in. That's something that you could have done. And again, it just ran. So we had a smaller pullback from this part of the channel down to the bottom part of the channel, then getting in bullish from this part of the channel up to this part of the channel. Really nice target here. This is the 12 o'clock candle. So right at 12 o'clock was right here. You really could have been getting out at 12. So like in at 6, out at 12, that's a double on the option. That's 6R. And that's right into the resistance here, right into the potential resistance. I'll say that. It just didn't stop there. It pushed past. You could have been getting out at 12 and then let it go up, and it gave you not one, but two opportunities to get back in at that same $12 level, where instead of it being resistance or potential resistance, it's actually holding right through here as this new support. So the option, we're above this price. We're at the same price on the option here, not on the 5 minute. On the 5 minute, we're above it. And then right in these two candles, we retraced, retesting this level, and then again here, retesting this level. And a really nice hammer type candle here. It just has no body, but it's still a pretty strong candle. Right off the 21, right below our channel. So this is where bears were getting back in, saying, okay, it's gone high enough. Get in bearish and push it down, and it only came down this far, and then it bounced. And I mean, it was easier to miss all this just because you didn't have a clear target. But let me show you one other thing that isn't on the screen. I mean, it is on the screen, but it hasn't really been relevant. Friday, it wasn't relevant. We just stayed below it. Well, today, if I extend this to the right, this is where we retraced this same level. Like we pushed right into this level, retraced once, twice, and we went higher. Right now, we've pulled back into that, and this looks like another S curve here. This was a quick, 1, 2, maybe 3 S curves here. Taking the bigger picture, the bigger look, I left this in here thinking there's some potential I could really get above this. If this holds, I think this is a bullish break of the triangle. I think Friday and today were a false breakdown below this level and trapped more bears. But this is 5 days of resting after it made an all-time high. I mean, it's not really rest when it's making an all-time high. So maybe consider 4 days of resting. But this is a rest at this level. This is a really nice flag pattern, and now we've got a bullish engulfing candle. This could be a bigger S curve, and this could just start running. I've guessed things like that before, thinking, oh, it's just going to happen, and I've been wrong, and I could be wrong this time again, and probably am. But I'm really going to watch for this to go and look to get in bullish on any kind of pullback. If it can pull back into this line again. So let's say, okay, that's our normal amount of time pre-market. There's this amount of time that day, this amount of time this day. So let's say pre-market tomorrow is like this, about this wide. So the price at this point is 21.50. It's a nice round number, and we bounced off that here, and we bounced off that here. If we can come right back into a nice round number, 21.50, and then go, I mean, really, we could go. I always like to see, anytime there's a triangle, I like to see the move after the triangle be the same as the open of the triangle. And so in this case, that's going from 21.35 up to 21.85. So that's $60. If we can go from 21.50, $60, that's 22.10. That's about up here. I mean, at a minimum, that's where I would look for a nice target. So if we can get that kind of move in the next couple of days here, a nice retracement, a little more of a rest, slight inside, yet, holding the high, holding the upper half of this candle today. If we can get that kind of rest, I don't know if it's going to slow down for that, though. It might just start to go, it might gap up, then retrace. It could retrace back down to 21.66, back down in the 21.60s, just because it's retesting these highs as new support then. But I mean, you got the downtrend here, and then you have a couple of candles up here. I mean, really, this one's I guess I would discount this a little bit. I would say this is a really nice high to retrace, 21.65 on both of these. So if we can get a move higher, or if we can see that being resistance and go sideways a little bit more and do some sort of like a sideways consolidation like this. So if we get pre-market about this wide and then get sideways for like half the day and then push through, I think it's gone. I think it's going to continue on up. And I would say it's going to get into 2,200 this week if it can continue that. I think it'll hit 2210 this week if it can really get going like that. But yeah, we'll have to just wait and see. So we looked at calls, we looked at puts. Oh, and in here, so if you got it at 12, great, nice job. You went from 6 to 12. You had the other opportunity to get in here at 12 by 11, and that ran up a couple hour, and then another opportunity 12 by 11. I don't know how well this one would have worked out just because this got really, really spready. I'm guessing it got really spready as this pulled back so quickly. Usually that means really spready options. And so if somebody was filled at 11:07, I don't know what their stop would have been. Maybe it was 11:50 and got stopped at 11:07. That's my guess, that it was that bad of a slippage, because I've had slippage like that. And then it was right on up on the next couple of candles. So that was some quick moves back up. Let's see, at 1 o'clock, was there anybody? Yeah, so nobody bought at 1 o'clock. So I can't tell you what the price was at 1 o'clock, but at 105 and 110, we were right back up around 13. And so that would have been a little harder to have a $100 risk. Now, the other thing you could do technically, since you're up 6R, is instead of just taking 1R, take 2 of those Rs and get in 13 by 11 and just plan on moving your stop up quickly. So you're only risking an R, but you're up on the position. And so if you wanted to risk a little bit more, only a little bit, not the whole 6R, but that's something else you can do to see if you can get a little more of a risk on something that's moving, or you just move out a little further on the option. So either of those are possibilities. And if you moved out to the 2200 calls, these give you some opportunities to get in way down around 3, move on up at noon, got into 7. So that would have been a move, 4R. So very similarly, nice move, doubled, more than doubled from 3 to 7, just like the other option moved from 6 to 12. This one moved 3 to 7, so it actually moved a little further, and then gave you opportunities to get in 7x6 and 7x6. And this had a really nice hammer. The range in this was a little more than $1, and then or a little more than $100, and then the next candle pulled back right into 7. And so if you were able to get in at 7 on either of these, that's a great setup. Or this one didn't move as quickly. It printed a 1 o'clock candle. So getting in like 750 by 650, or like I said before, if you get in like 750 by 6, you have $150 risk, and you take, half an hour of extra gain that you got from this move, put it back into this next move just because, and then, get that stop tightened back up quickly. So you're not giving back extra. You're just doing that because you are up and you have some opportunities there. So that way you can get in 750 by 6 and then quickly move to 650 to 7, and you're just trailing your stop, and it's just running. You base the trade on it being $100 risk. So you go from 750 right back up to these highs at 950. That's a nice 2-hour move. Had you held into the highs here, it did get to 1050. Probably we're not the ones selling at 1050. If you were, way to go. That's amazing, because it's really cool to catch a top like that. And then, so you had a couple opportunities to go from to get out at 7, get back in at 7, and get out at 9 or 950, and get another 2R. So let's say you got 4R here, and then 2R here, and 2R here. So that's an 8-hour day, with your $100 risk. So, and again, technically with a double bottom here, you probably could have been doing 3 by 250 and gotten into 2 of these. And then when it got up to 7, probably just do a single one and do 7 by 6 up here. Just because it's more expensive, and it's going to have a wider range than it did down here. If you were able to do that 3 by 250, then you got 2 of those, and it moved again right into 7. If you just got out at your target, and that would have been already a really nice 8-hour move. So 8-hour plus 2R plus 2R is then 12-hour. So that would have been an even better day. And that's what we'd like to all aspire to doing in a day, is getting that many hours. So keep an eye out for this kind of thing to happen, this kind of pullback, double bottom, just smaller candles, getting into our levels. We're looking at it every day, most every day, trying to figure out how do we do better at trading this. So hope this helps. This is Justin AMZN. Thanks.